Well, multi-asset for income means a very different thing from single asset class income or dividend investing. Multi-asset allows us the benefit of global asset allocation. We invest for total return, not just for dividends, so for total return so that we can then construct a portfolio to pay us a dividend on a regular basis. Well, it's very much one about the management of the journey. When we're thinking about multi-asset investing, it's investing for all different types of market environment. The important thing for an asset allocator to get right is which are the best assets to be in, i.e. which are very expensive or which are very cheap, and make sure that the risk balance of the portfolio is set appropriately at all times. So it's very much more about managing that journey, so it enables you more to not experience quite such the pain, say, of an economic recession or a market crash, but still to experience the benefits of an expansion. Well, our target, our aspiration that we set out to our customers is to achieve a total return in the region of 6 to 8% on an ongoing basis, on an annualized basis. Now, within that, we construct a portfolio to seek to deliver a 4% yield on an ongoing basis too, on a forward-looking basis. And I'm happy to report we've hit those targets. The peer group does lots of different things. There are some income multi-asset groups, there are some total return asset groups. So despite the fact that when you look at the peer group, the fund has performed exceptionally well over the 7 years that we've been running the portfolio, that's not the thing we care most about. We care most about, are we doing what we committed to deliver to our customers? And the answer is yes. So that's a good thing from our perspective. Despite the fact that at the headline level, fixed income yields are low, there are some great opportunities, yes, even within fixed income. So when we're looking at Europe, there's the peripheral sovereign bond markets of Portugal, Italy, and Spain. Even further afield, when we're looking at US Treasuries, the 30-year end of the curve looks decently priced at 3% for the current environment, given where short-run interest rates are. That acts as a good diversifier for some of the risk on the rest of the portfolio. So when we're looking at equity returns potential, which is really quite significant in an environment of growing earnings, we're seeing growing earnings and growing dividends both in Asia, in Europe and the UK, and also in America within equity markets. So despite the fact that at the headline level, some of these indexes are looking less comfortable from a valuation perspective, there are ample opportunities within the asset classes. When we're thinking across the asset classes, and the customary way, of course, is to think of them as equity, bonds, cash, we need to be very careful what we're addressing from a risk perspective. Not all equity is risk, and not all bond is safe. And cash is cash. Cash just sits there, and that's absolutely fine. And sometimes you'll have to pay a small amount to your bank to keep it on deposit, and sometimes they'll have to pay you a small amount. It gives you a lever to pull, so allowing cash to drift higher at times when you want to be nimble and flexible to acquire assets should they experience volatility is important. Currently, I don't have a massive amount of cash. I've got 5 or 6% of my portfolio in cash because I want to take opportunities that exist within those asset classes. I think it's a mistake to look at the top level valuation and say these aggregate indices are expensive. One brief example would be the UK. So at the top level UK valuations, well, they don't look unappealing, but they're not as cheap as they have been. But if you look at those entities that were sold off subsequent to the Brexit referendum last year, then they become much more interesting. There's still a good 20 percentage point gap in the price performance of those domestically facing businesses in the UK between those and the aggregate index. So there are plenty of opportunities within these markets where we can find good value going forward.